What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for NIO with the ticker symbol NIO. I will first be going over what I see in the daily chart and finish the video off with the weekly chart. This video is for entertainment purposes only. Please trade at your own risk. So today, NIO dropped down 1.43 percentage points. It's still at the prior resistance. As you can see here, $7.70 was a strong resistance before. This was an area that price stalled out at and could not move up higher. And we're seeing a similar situation play out, not as significantly as before, though. This was a huge collapse down. We're kind of trading around this level, which is, a better sign for higher prices. But we're seeing weakness by the bulls. You can see that we have a high right here by the bulls, a very minor high, and another minor high. Typically, when you see three in a row like that, that can lead to a decent sized correction. So we could pull back towards the support side of the channel at the low sevens, maybe even break it to enter the mid sixes. So if we don't see immediate reversal soon, that's what's most likely going to play out, a deeper pullback for price to move up higher from there. So this could be like a bear trap in the pullback, and then we finally reload for higher prices. Overall, I think the trend still looks pretty healthy. We have a measure move target at 945, 946. It's not guaranteed to get there, but it is a target. So we have one leg up right here. All this is one leg up. We saw a correction, and then it began to climb up for a second leg up. So we have one leg up right here, second leg up, and that's how I got to 946, which coincides with the next peak. I mean, this thing is like clockwork, right? It's like mathematical in a sense. We come up to one peak, and now we're targeting the next peak. Not a coincidence at all that the measurement target ends there. So, but anyway, in the short term, there's some slight divergence, bearish divergence going on, and we could see a little decline. As long as buyers defend the trend line or the channel support, there's a good chance for higher prices. If you break it, that's fine too, but you don't want to see a strong break of the line. You don't want to see the bears make candles like this, a strong line like this down. That would not be the best sign. It can always still recover, but that's not what you want to see. If we break the channel, you want to see like a weak structure like this, and then it can reverse higher. You don't want to see like boom, like a strong breakdown, with a lot of red candles. That means it can create a bear flag for lower prices. So either we, can reverse as soon as possible, which would be the most ideal situation for the bulls, or in this case, it looks like we're seeing signs of weakness. We could pull back to the low sevens, high sixes before moving up higher. But in the event that we do see a break of the channel, you just want to see a structured break or correction. You don't want to see a strong one, as that can change the trend direction for lower prices. So that's how I'm looking at NIO. I think overall it's still bullish. All this is still looking bullish. Short term, we're seeing signs of weakness at resistance, which is, not out of the ordinary. You just want to see price being able to recover. If we do see a drop down towards the low sevens, high sixes, and then we'll probably move up higher towards the mid nines, which is still a target that's not invalidated unless we break below 560. So that is the line in the sand of that target. So overall, NIO still looking pretty good. Taking a look at the weekly chart. Weekly chart still looks pretty strong. We're a little bit overextended from the EMA. Maybe that's why we're pulling back. You can see that it's kind of like the same overextension from this move right here. From this EMA to that line, or the top of the candle, is this much. This much, practically just slightly below that overextension of this move right here. From the EMA to the top of the candle, from this EMA to the top of the candle, we're technically still below it, but still pretty overextended. So, the market's going to be pulling back. It can't just move at this pace forever. So slight pullback, maybe consolidation at this high price level is healthy, and most likely price will continue higher. So overall, structure looks pretty good. Seeing a little bit of bearish divergence taking place, a little bearish imbalance. Looking for a little pullback. If it does happen, don't expecting anything really strong. Basically, you don't want to see like these three red candles down. Let me go and copy that over. So if you don't want to see like huge, you don't want to see like something like this, a huge strike down, and then most likely it'll pull back for lower prices. That's not what you want to see. I don't expect that to happen. I think that's a lower probability event for right now. So, saw it for NIO on the daily and weekly charts. This is Vee Trades, and thank you for your time.